Imagine owning a piece of some of the world's biggest companies. Investing allows you to do just that. But with terms like stocks, bonds, and ETFs, getting started can be overwhelming. What if understanding the basics of investing was simpler than you thought? In this video, we'll unravel the mystery of investing and help you take the first steps towards building your financial future. Welcome to your beginner's guide to investing. Today, more than 60% of American households own stocks, either directly or through investment funds. Yet for many, the world of investing remains a puzzle. The good news? You don't need a degree in finance to invest successfully. It all starts with understanding a few key concepts, asset classes, and the investment risk ladder. In this guide, we'll walk you through everything from the safety of savings accounts to the dynamic world of stocks. You'll learn how to balance risk and reward, diversify your portfolio, and make informed decisions that align with your financial goals. In this video, we'll explore the foundational elements of investing, starting with the different asset classes. You'll discover why cash, despite being the safest option, rarely outpaces inflation. We'll discuss bonds, which provide steady returns and sit between the safety of cash and the volatility of stocks. Moving up the risk ladder, we'll cover mutual funds and ETFs, explaining how they offer diversification and simplicity for beginner investors. We'll take a closer look at stocks, which offer the potential for high returns, but come with risks that require careful consideration. You'll also learn about alternative investments like real estate and commodities, which offer unique opportunities and challenges. Most importantly, we'll discuss the concept of diversification, spreading your investments across different asset classes to reduce risk. By the end of this section, you'll have a solid understanding of how to build a balanced investment portfolio that can weather different economic conditions. Investing is an integral part of financial planning for over 60% of American households. Even though investing might seem complex with its array of assets and concepts, it essentially boils down to understanding asset classes and their corresponding risk and reward potential. The investment landscape ranges from the security of savings accounts to the growth potential of stocks. Knowing how these assets align on the risk ladder is crucial for any beginner. Key takeaways from the world of investing suggest diversity in assets, understanding risks, and favoring index funds or ETFs for nascent investors. The stock market, despite its volatility, has historically offered more significant returns over extended periods compared to bonds. Conversely, diversification is consistently advocated by investment experts, aiming to distribute risk rather than concentrating it in a single asset type. Diving into the investment risk ladder, the spectrum of assets varies from low-risk to high-risk options. Cash, typically kept in savings accounts or CDs, is the safest investment, but also offers minimal returns that often fail to outperform inflation. Alternatively, bonds offer fixed income through interest but are subject to fluctuation depending on central bank interest rates. The mutual fund market facilitates access to a diverse range of assets even with minimal capital, either through passive funds that mimic market indexes or actively managed funds aiming for higher returns at the cost of increased fees. Understanding the basics of investing equips individuals with a sensible approach to embark on their financial journey. Starting with broad-based investments, such as mutual funds or ETFs tracking prominent indexes, forms a resilient groundwork. The concept is straightforward, acquiring broad market exposure rather than fixating on individual assets initially. Minimizing costs is another fundamental, as excessive fees erode potential gains. Thus, low-cost index funds are preferable. Warren Buffett's revered advice to lean towards an S&P 500 index fund and a U.S. bond fund underscores simplicity yet effectiveness in investment strategies. As investors become more seasoned, diversifying the portfolio remains essential to counterbalance risks, although overwhelming oneself with various assets is unnecessary. Practical investing endures through market fluctuations, finding its strength in simplicity and sustainability. Economic climates also play extensive roles in guiding investment decisions. Typically, economic booms favor stocks due to enhanced corporate profitability, whereas bonds grapple with interest rate hikes. Meanwhile, real estate thrives with strong employment rates unless burdened by elevated mortgage costs. Contrarily, economic downturns witness the appeal of bonds, buoyed by dropping interest rates, and cash, albeit it yields no interest. Ultimately, investors need to demystify various asset classes to tailor their portfolios according to individual goals and risk tolerance. Acknowledging the limitations of each class, from liquidity issues in real estate to inflation resistance in commodities, refines investment understanding. Following fundamental principles of lack of emotional sway by tips, thorough comprehension of investments, and seeking unbiased financial advice sharply focuses the lens on long-term investment success. Managing expectations, adapting to economic shifts, and adhering to a diversified portfolio are the cornerstones of sound investing. Let's recap what we've covered in our journey to understanding investing basics. We started with the concept of asset classes, which form the building blocks of any investment portfolio. Cash, while being the safest, offers limited returns and struggles to keep up with inflation. Bonds provide a middle ground, offering fixed returns and lower risk compared to stocks. Mutual funds and ETFs emerged as excellent options for novice investors, providing diversification and ease of management. They allow you to own a piece of a broad market index without the need to pick individual winners. Stocks, while riskier, offer the potential for significant long-term growth through price appreciation and dividends. However, they can fluctuate widely and demand a longer investment horizon. We also discussed alternative investments like real estate, hedge funds, and commodities, each offering unique benefits and risks. Real estate investments, particularly through REITs, provide a way to earn higher dividends. Commodities like gold act as hedges against inflation, offering protection in uncertain times. We emphasize the importance of diversification, spreading your investments across different asset classes to mitigate risk and enhance returns. Understanding the economic context is crucial. Strong economies favor stocks and real estate, while bonds and cash-like investments offer stability in downturns. As you set out on your investing journey, remember to start simple with index funds or ETFs. Keep costs low and gradually diversify as you gain confidence. Don't forget the timeless advice of investing legends. Focus on what you understand, ignore unreliable tips, and consult with fee-only financial advisors who prioritize your interests. Armed with this knowledge, you're ready to make informed decisions and build a portfolio suited to your goals and risk tolerance. If you found this guide helpful, make sure to subscribe to our channel and hit the like button. Dive deeper into the world of finance by exploring our playlists on Wall Street, Companies, and Investment 101. Keep learning, stay informed, and take the next step in your investment journey with us.